Thank you, Tycho, for joining us. For the audience, Tycho is the co-founder and CEO of Zest Protocol. Before I get into what that is, let's have Tycho kick this off and share with us what he did before his entrepreneurship journey in Bitcoin. Tycho, can you share with us a little bit about, what did you do before your
absolutely.
first startup? Yeah.
Absolutely. Yeah. So I could say before venturing into crypto, I started a different company, a SaaS company, actually in the database space, and I think that made me a bit puzzled by the amount of data that we were storing for our customers, maybe kind of opened the mind for different ways to store data and stuff like that. And then really in 2020 was when I got very excited about crypto, and was really saw the first products, especially in the DeFi space, and wanted to be part of it.
Okay, all right. So let's I'm actually very curious about the data company that you built before 2020 when you got into crypto. But even before that, what were you doing before that?
Before that, I was a student. So I started that company with some friends that I met while studying. I studied at Oxford in the UK, and I studied history actually. So also not necessarily a technical background. I sort of started as a sort of a sales guy at the previous company with some of the others were working more on the technical stuff, but there was such a big gap between what I was selling and what we were building that I needed to become much more focused on the product side of things and let some other people do the sales more. So that's when I became more and more product oriented and I guess sort of developed in that direction.
Interesting. So you started this data company while you were in university at Oxford studying history. Okay. Yeah. Excellent. And let's backtrack even further. Before university, did you have any like businesses, or did you try entrepreneurship before this, even if it's like a very, very small thing?
Yeah, actually not really. I mean, I think most people come with some sort of story of them selling lollipops or something in the school or something like that. I don't have one of those stories. So I would say that like while I was at school, I was very interested in especially in history, right, which is what I ended up studying. And I guess I was sort of so interested that I was like, I want to go to the UK to study that and go to a very good university, and had to really use the internet to figure all that stuff out, and sort of I guess there was some sort of entrepreneurial part to kind of making that happen. So I would say that's like part of the story there is like to kind of try to kind of grasp opportunities and move forward with them, but no story about me selling something.
Lollipops. yeah. The funny thing is, I do have a story about how I sold chocolate bars when I was a teenager. But
there we go.
That's a story for another day. But okay, no, the reason why I asked this is because I want to trace the origin back to your first entrepreneurial experience. And so if it is the one when you're studying history at Oxford, then let's start with that, because is studying history to becoming an entrepreneur. That's like was there like a moment of inspiration, or what caused you to? That's a pretty big jump, at least in my mind.
Yeah. I would say that it never really happened in a sort of very deliberate way, right? So it wasn't the case as though we came together and we're like, let's build a company or something like that, right? Because initially what we started was more like it was essentially a volunteering platform, right? So this was kind of like 2015, 2016, right? The sort of era of like a marketplace for everything, and we were like, oh, let's create a marketplace for volunteering specifically and for volunteers. It's like maybe it's like a nice thing to do, like kind of a pet project. And that sort of started working very well, and and people were very interested in marketplaces at the time. So we got managed to raise a little bit of funding for it. Then we sort of thought, okay, look, we could incorporate this as a charity project, right? Or we could actually turn it into a company, which is probably the way we're actually going to going to make this project last, right? It should be a company, because that's the way to do it. And then it was like, we kind of look at each other, we're like, okay, so is this thing that we're doing, is this a startup now, right? Maybe, right? And yeah, so we kind of incorporated in the company to raise some money initially, and then it turned more into like and it essentially turned into like volunteering marketplaces as a service, right? And then with a very large sort of database component in the back, so that NGOs could manage all their volunteering opportunities and volunteers and stuff like that. So that's sort of more where it went then. But yeah, it kind of got started with just starting a project really, and starting something small. So that's it really.
No, thanks for sharing that. And what did you guys want to do in market, or why did you want to start with volunteering? Like, what was the impetus for that?
Yeah, I think it wasn't really it didn't really have anything to do with trying to make money or something like that. I think it was initially just, we thought it was just a nice thing to do. Right? It's
Can you explain that? What do you mean by you thought it was a nice thing to do?
Yeah, I think it was just like we all of us had been like doing some volunteering in the past, and we thought like, yeah, there's this whole digital age going on, and it's very hard for NGOs to kind of catch up. So do we want to go and work at Goldman Sachs after graduating, or do we want to do something like this, right? And that's maybe the sort of thing that united us, which then yeah, and then how can we actually do that, or how can we achieve that sort of social mission, right? And then it was like, well, your company is the best vehicle to do that, and raising money as a startup is the best vehicle to do that. So I guess it's always been very inspired by kind of trying to push a certain mission forward, which is I think also very much what I'm doing in crypto in many ways.
Yeah. Before we get into crypto, I'd like to point out to the audience, this is like a pattern that I've been seeing over the years of training hundreds of founders, is that I don't know what the exact percentage is, but it's way over half, where the founders they may, like, it's not, sometimes it's deliberate, sometimes it's not deliberate, but the common denominator is that they experience something in their life that when they intuitively firsthand experience, they know, well, this is a need that hasn't been met in the market, right? And sometimes we're lucky enough, we're smart enough, like, or maybe a combination of both, to say, hey, maybe this could turn into business by tinkering around with a mini solution, and then eventually, hey, this could become bigger, right? So thanks for sharing that with me. I think especially for our audience, I think I hope people, after hearing this, you'll dig deep, think about the things that you've done recently or in the past, and think about, hey, what were some things that could have been done better, right? Because that could become the next big idea, right? So thanks for sharing that. So what happened with that company, can I ask?
Yeah, of course. So we so initially, so we first started with like this volunteering platform, and then more and more NGOs started asking, hey, like, we like your platform, we would like to have it in our own brand, right? So that's when it became more and more like the idea to do these kind of platforms as a service with the whole database component. And then actually increasingly we started shifting more towards the government markets, right? So like in the UK and in the Netherlands, right? There's a lot of like essentially local governments that sort of organize volunteering locally. Maybe sounds a bit strange from a US perspective, but this is a sort of a big role that governments take on, because they're like, look, if people volunteer, then we're going to pay less on like all the social security, right, that exists in Europe. So it's like a very sensible investment. And yeah, then essentially it maybe served those customers. And then, it still serves those customers. Right? So in 2020, we turned the company profitable, and that was sort of the moment when we brought like a new management in, and our investors took a bit more of an active role as well there, and essentially gave us the opportunity to sort of exit and do something new, and the company is still running to this day as a profitable SaaS company, right? Because these kind of parties like local governments and charities, very long sales cycles, right? So it didn't really fit on the sort of VC timelines. We tried very hard, but it was people just needed a lot of a lot of time. So then then we thought of turning it to we managed to turn it to profitability, and yeah, now it's running on its own.
Yeah, thanks for sharing that, and congratulations on the successful exit and building something successful the first time. Definitely want to pick your brain more about that, and later on, maybe you have some insights, because as you know, I think as the audience knows too, is maybe the first two startups are usually like training wheels before we actually do the successful startup, right? So it'd be very interesting if we could learn like 1 or 2 points on why you think your startup was successful, whereas other startups were not successful for the first time.
Yeah, I think, I mean, we were very much operating in this kind of blue ocean kind of market at this point, right? It was almost kind of too small in some ways, right? And yeah, I guess where did it like, we were very like, looking back, we were very frugal, like the amounts of money we raised with sort of pale in comparison with sort of what's even possible these days. And yeah, we were just very focused on actually making it last, right? Yeah, like it was a sort of reasonable success kind of coming out of it, right? It was not like a sort of $1 billion kind of outcome, which is of course what we were aiming for. But I think even if you're like aiming very big, right, you need to kind of have these kind of milestones in your head. Okay, like I reached this, and then you can go to that milestone, and you can go to that. And yeah, maybe if you get stuck somewhere in the middle there, right, towards the grand vision, then yeah, if you've kind of done it in a good way, you can probably turn it around somewhere there, right? So I guess most companies sort of never, right, fully fulfill their mission. But if you sort of have a sort of tiered approach, so, okay, we first do that, and then we do that, and then we do that, and then there's the grand mission. Yeah, you're probably going to get stuck most likely somewhere in the middle, right? And then you can turn it around, and someone can buy it, or it can run independently, or it can do something there, right? And maybe it can't, right? It also depends a bit on the circumstances, and then it will just it can just go bankrupt, right? That's also a fair outcome, right? There's learnings there too. So yeah, I would
Thanks
say,
for sharing that. Let me try to summarize that for the audience here. So first, start with something that people really want, right? And the second thing that was in your advantage, it was a blue ocean, meaning that I'm interpreting that there's almost no one doing it or no one doing it. And then another pattern I've seen for successful entrepreneurs is that we're very frugal, right? We're very frugal because you don't really know what's going to happen. And even if you raise money, you still want to make it last as long as possible. And then be practical. I see a lot of people with like a big vision, and then the way we hurt ourselves is when we try to take too big of a step at one time. So when we cut it up into manageable steps, right? It's like take the small win and then stand on that small win to get another small win, right? And by doing that, you'll end up getting a lot further than trying to take like 10 steps at one time, right? So that's very wise advice. Thank you for sharing that, Tycho. And so let's because I would imagine most of our audience is either a Bitcoiner, believes in Bitcoin, or at least in the Web3 crypto space, right? So you mentioned that you exited that in 2020, and then you got into Bitcoin. How's that transaction like? I mean, out of all the things to pick, why did you pick this one? And in Web3, why did you pick Bitcoin? Right. And where did you go? Where did you go?
Yeah, no, good. I mean, I was very crypto curious for quite a long time, right? So like, I guess in the whole 2016 2017 bull run, that was sort of when I really got my first exposure. Bought some Bitcoin, bought some ETH, bought some tokens that are no longer around today, and was sort of very interested in the technology, especially smart contracts. And I think because I studied like history, and specifically financial history, it was like that was sort of where it really kind of clicked for me. But what I didn't see at that time was like products, right? So the kind of things that people were building in 2017, well, in hindsight, right? Like the things that came out of it were like Aave and some of these DeFi protocols. But back then that wasn't very clear, right? People were like launching ICOs left, right, and center. and the products that were works very well, or that sort of the types of companies that you could build maybe at that time would facilitate ICOs essentially, right? And yeah, that didn't really seem like to me like something that would last. So it wasn't very clear to me where a potential product would arise that would actually be self-sustaining, right? So I left the space for some time, where I kept kind of looking from the sidelines. And yeah, then in 2020, it was very interesting to see, well, for one, the first like decentralized exchanges really coming into the mainstream, and then lending and borrowing protocols, and yeah, then when essentially seeing that right during the sort of DeFi summer, but also a little bit towards the end of that, then that was really something that clicked for me, right? Because it's like, hey, this is essentially this kind of online casino that some of these exchanges are, and it's actually bringing that on chain, and that is going to create on chain revenues, and then with that people can sort of create new things for that kind of on chain capital, and sort of start servicing it with more and more products, right? Which is then also what NFTs and tapped into all this kind of capital formation that had happened before. So yeah, that was really the moment where I saw like, hey, there's something you can build here, but Bitcoin is not plugged into this DeFi ecosystem, and how would you go about doing that, right? And that was sort of the first line of thought that then kind of set me off a bit to where we are today.
Well, that's interesting. Which year was Bitcoin DeFi? Remind us. Summer DeFi summer.
Yeah, DeFi summer was in 2020, and then I would say kind of towards the end of it is when I started looking a bit more deeply into what was going on.
So the next question is, you observed this opportunity where DeFi was growing quickly on Ethereum, but it wasn't linked to Bitcoin, right? So the next question is, this is just for fun. No one really knows for sure, but if you had to sort of project it, when do you think the Bitcoin DeFi summer is going to be?
Yeah, I think it will depend a lot on like what we manage to do with the big upgrade to the stacks layer, right? I think that's right. Going to be the really crucial thing to be able to hold Bitcoin or BTC L1 assets, right? Like whether they're BRC20 tokens or ordinals or something, if you can move them to an L2 to make them fully programmable there. Maybe it's already started, right? Maybe Bitcoin DeFi summer has already started with the whole BRC20 wave. It's hard to tell. Maybe we'll look back at this video and then we can laugh at the early signs that sort of is something very big. But I think it will be it's either this summer or the next one when full programmability is unlocked for these assets using the stacks L2.
Yeah, I tend to agree with you. It's going to happen faster this time. It's almost like Ethereum did this huge social and economic experiment, and now that it's gone through like a bear and a bull market and back to a bear, we know which business models can stand the test of time, and then now we could just do it better on Bitcoin, better and bigger on Bitcoin, right? And so it really is this unlock with SBTC that you briefly touched on. One is I want to go back to your project, but when is SBTC roughly going to launch? If I understand correctly, I think the first people can be testing on testnet either now or soon, right? What's the timeline on that?
Yeah, I'm not 100% sure on the timeline when something will be launched on testnet. However, when it comes to SBTC, right, which is like essentially the way to move Bitcoin from L1 to L2, right, on stacks in a non-custodial way. It's basically kind of tiered into a few different stages, right? One that is a bit more centralized, right, which would be like an alpha version or a mini version. And then the full consensus upgrade and the hard fork of the Stacks L2. Now that sort of full consensus upgrade hard fork Stacks L2 that's scheduled for this year, and a more centralized version is likely coming online either in summer or towards the end of summer of 2023.
Okay,
This is all
Interesting.
public
Yeah.
information, by the way. Like if anyone is curious, there is an SBTC working group that anyone can join. There's a GitHub link. So if you want the latest info on this, then it is possible to find that or ask in the Discord.
Yeah, just ask. I mean, ask Tycho, ask me. We have a lot of startup lab teams that are ramping up to upgrade with SBTC when it comes out later this year. So it's really exciting. But before we get into that, let's go back to your transition into crypto, right? So you did an exit in 2020. I'm just curious, really quickly, was there a gap between selling that company and doing what you're doing now? And if so, how long was that gap?
Yeah, there was definitely a bit of a gap there. I would say that yeah, because also that time was COVID, right? to bring people back. So there was a bit of a gap there where I mainly did some exploration and looking into DeFi, looking at all different DeFi protocols, how do they work, trying them out, right? So mainly that, kind of being a user, and then slowly but surely came across stacks, right? And that seemed to me to be the most the most promising way to do anything programmable with BTC, specifically because you have the read access to Bitcoin state natively from the Stacks contract. So I came across Stacks, and then around that time was met up with Trevor, and then you kind of became a mentor in the Stacks Accelerator, right, which is kind of now the Bitcoin Frontier Fund, and there met some of the early people building DeFi, on Stacks, right? Like the Alex Lab projects, right? Gente and Arcadico, for example. And that's where I sort of really then started thinking about deeply about doing something with this, with this technology. So there was definitely a bit of a gap, definitely a couple of months of actually trying to figure something out, because it's also, I think, looking back at the previous company, I was like, okay, now want to actually be in a very big market, right? Because it's actually very hard to build a company in a small market or a big market. It doesn't really matter. So I want to be in a big market, or at least in something maybe that's small today, but that will very likely grow very big, and then just grow with that, right?
Yeah,
and
it's
wanted
sort of
to be
like
very picky. Wanted to be very picky about what to work on next.
yeah. Let me interrupt for a second here. So yeah, because you already have muscle memory from last time, because you mentioned it was the blue ocean, meaning that there's almost nobody there, and it was growing. It's very much the same thing with Bitcoin and Stacks, right? Like right now, I mean, like the entire Bitcoin ecosystem is tiny compared to Ethereum. We didn't even have to talk about the other chains, but we could see the potential, right? So you enter the blue ocean at the beginning, and as the saying goes, a rising tide rises all boats, right? So when I say boats, like, of course, this is a metaphor for the startups that are being grown in this ecosystem. So your boat is Zest. You mentioned that you met Trevor, and you're a mentor at what is now known as a Bitcoin Frontier Fund, which is a fund and accelerator that helps people build awesome Web3 Bitcoin startups, right? And so during this time, when did you join Trust Machines? Was that first, or did you do Zest first, or was that like together? Like what's the dynamic there?
Yeah,
Because you're the general manager of Trust Machine, one of the general managers of Trust Machine, as well as the co-founder and CEO of Zest Protocol.
Yeah, it kind of came at the same time. And also at the time when I joined Trust Machines, right, which is in November 2021, that the company was not sort of publicly announced yet, right? So it wasn't really known that it existed. It was also just Manib and JP at that point, and Chris, who's building console, and Gina, and of course chief of staff at Trust Machines. And yeah, I kind of just stumbled across them because I was kind of doing stuff in this sort of Bitcoin L2 ecosystem and talking to people. And yeah, essentially the idea, when I first spoke with Manib about Trust Machines and what we could potentially do, the idea was very much sort of hand in hand, right? Like, okay, let's try to incubate or build a DeFi app that leverages this sort of core functionality of the Stacks layer, right, which is read access to Bitcoin state, right, and actually use that to do some true Bitcoin DeFi. But at the same time, let that kind of development process like inform potential infrastructure that needs to be built. Right? So we went out there and started working with Franz Ferdinand and Emil, essentially on what is now Zest protocol. But back then it was like, let's try to kind of experiment with what can we actually do, right? You could move Bitcoin on Bitcoin L1, and then you could respond on the stacks layer. And then we figured out initial design, but mainly figured out, look, if we'd want that initial design to actually scale, what you really need is Bitcoin trustlessly on L2, right, on the stacks there. That's what you really need, right? So you really need like SBTC to unlock all of this stuff. So then sort of started driving a lot of that.
Sorry, let me back up. I'm going to interrupt just so the audience can follow. Maybe give a quick overview of what Zest does and and share a real life use case. And that way we get back into this, and maybe the SBTC layer 2 might make more sense for the audience.
Absolutely. So Zest protocol, essentially what the aim for Zest protocol is, or why we began building it, is like to enable people to have an on-chain method or way to earn a yield on their BTC, right? People can send Bitcoin to an application, and then from there, they earn a yield, right? They earn
like a Bitcoin yield.
Exactly, Bitcoin on Bitcoin.
Okay.
That was and back in the day, right? There were like BlockFi Celsius, which has become very, very large, and we were like, look, we want to offer this to people in a decentralized way, right? And then boom, they all went bust for the reasons that we
So it's almost like BlockFi, which was centralized, but you guys are doing it decentralized, meaning that it's non-custodial. You don't touch the funds, smart contracts,
fully transparent, right? Fully transparent. And for what you need to do there is like you can use this beautiful primitive of DeFi, which is a liquidity pool, right? So Bitcoin is sent from somewhere, it ends up in a liquidity pool, and then from there it's lent out or it's moved around to earn yield, and the liquidity pool kind of controls that part. The user doesn't need to do that. The user just collects their yield. And so what you need to do for that, right, is you need to move Bitcoin into a liquidity pool on chain. Now Bitcoin L1 doesn't allow for that, right? Because for a liquidity pool, you need to be able to, point the Bitcoin to an arbitrary address that's not known in the future, which you cannot do on the Bitcoin side. So essentially, the Bitcoin needs to move to L2 first and held in the liquidity pool there, right? In L2 like stacks. And then when a borrower comes along, or when the other side of the trade happens, it needs to move back to L1.
That's fascinating. That's fascinating. It's almost like a bank, right? But managed by smart contracts. I mean, it sounds like a bank. People put money in. You don't know who's going to borrow it in the future, but the idea is that there's money in the vault, and somebody in the future is going to borrow money from the vault. Except in the Web3 or DeFi world, that vault is called a liquidity pool, right? And instead of it being like a physical location, it's in the digital world. And instead of people being able to decide how to manage the money, is smart contracts doing everything. Is that sort of what's happening there?
Yeah, I mean, it's very crucially not a bank, of course, right? Because
right. Because let's not call it a bank, because like banks are centralized.
Exactly.
Like the vault mechanism of a bank.
Yeah, there is essentially a way to deposit funds and to in a programmatic way to earn a yield on those funds, right? Which can happen without sort of humans interfering there.
Super. So yeah, I mean, this is going to be a game changer, because in any kind of financial or DeFi market, it's basically like a lending, borrowing, like credit product, right? It's like a credit provider. And as anyone in finance knows, this is one of the primitives of a financial ecosystem, right?
Yeah, absolutely. That's also the market for credit globally, right, is larger than money, right? Famously, there's more credit in the world than there is money, right? So that's
I don't know if I mean, I read last year in 2022 the credit market was $300 trillion. Is that true, or is that close, or
I
what
mean,
was
the
it?
kind of estimates that we've used, or that I've seen around, is about 110 trillion, right? Whereas global M2 is like around 100 trillion. Yeah, I mean, there's different estimates kind of going around. It depends what you kind of count as credit. If derivatives count as credit, if
Yeah,
derivatives start
yeah.
counting, it goes very quickly in the hundreds of trillions. But yeah, it maybe doesn't really matter. It's large. It's very large.
But let's put that into perspective. So what are considered the credit providers on Ethereum? Like which platforms, which protocols?
Yeah, I think quite crucially, right? If you just look at credit in general, like most of credit in crypto is actually created by centralized entities, right? So it's essentially a company that you would custody some big BTC with, or some ETH, that then lends it out from there. It's actually not done a lot on DeFi, specifically because the main asset that's being borrowed and lent is actually BTC, right? And ETH and stable coins are somewhat smaller. So yeah, so that's essentially the kind of current state of borrowing and lending. So specifically with Bitcoin, you see that it's really all managed by centralized parties, which creates a huge risk for the Bitcoin economy, right? Because there are companies
Right.
out there that need Bitcoin credits to function, right? Like market makers who can keep the price of Bitcoin stable, or miners who can keep the hash rate of Bitcoin up and make sure that the network is sufficiently decentralized. And they all fully rely on these centralized financial institutions, which can be very opaque and are very vulnerable to all kinds of sort of bank run type of scenarios, because they're so untransparent. Right? So the Zest protocol essentially sort of fulfills a way to kind of create a transparent version there, and create diversification for the Bitcoin economy, and in that way make it easier for give the Bitcoin economy a reliable source of credit.
Yeah, this is really pioneering, because by some estimates, um there's about $50 million worth of Bitcoin locked up for decentralized finance on Bitcoin, which is only 1/10,000th of the market cap of Bitcoin, right? And if you look at Ethereum, which is half the market cap of Bitcoin, I think there's almost 30% of Ethereum locked up in DeFi. So this presents a massive opportunity. Like, it's a blue ocean that people couldn't tap into until recently, right? And we finally can begin to build Web3 decentralized finance like companies like on Ethereum, but only bigger and better, right? So SBTC is going to be a game changer. So when you're building Zest, for the entrepreneurs out there, Tycho, what were the three main challenges that you had to overcome? Like, you had a previous success and an exit before, and you must have learned some things. And then let's say you get right, and then now you're doing the Zest protocol, which is this revolutionary credit protocol on top of Bitcoin. Now, I'm sure you try to map some things over, and then found out, oh well, that's not the same, right? What were those things, right? Because I mean, in my personal experience, I try to do that. I made money on a project, and I tried to do the same thing on the next project. It blew up in my face. So I'm just curious, what are some of those things that we should let's share some of those experiences with the audience, so in hopes that they don't have to make the same mistake.
Yeah,
Right.
yeah, that's very true. I feel still like very much in the kind of waters that I was used to, right? Like it's still I feel we're still not yet further than the previous project or company that I did, but I would say that I mean, in the beginning, some things that were the same, right? It's like, first of all, work with some great technical people, right? So met Franz Ferdinand, met Demille, Luis, Max, right? Who are all working on Zest protocol. So that was really, kind of the start, right? then I would say that probably the main thing that is different is that you're really working, especially when you're doing stuff with Bitcoin, right? You're working in an environment where a lot of things are not standard or not standardized, or a lot of for a lot of things you might want to do there, the tools don't really exist, or maybe the tools do exist, but they're not yet sort of fully production ready, right? And Hero is kind of the dev tooling company that works on a lot of Bitcoin dev tools, right? Maybe hasn't sort of fully developed all the features that you want yet. There's like a lot of kind of core infrastructure that you might not have, which then in turn means that you need to really have a lot of kind of creativity and flexibility around around actually building the product, right? There is not like a trillion libraries that you can rely on. You actually need to it's a very big technical lift, right? It's almost like deep tech in a way. It's really going in roads that are not yet traveled. So I would say that that's like really the biggest difference. Then when it comes to like the sort of go to market side of things, I would say that you need to really spend like a lot of time on that, right? Like especially getting people comfortable with a protocol where they put in money is very different from getting them to use a SaaS product, right? And it requires a different type of perception of the product, a different level of security, trust. Like trust matters a lot, right? We are in this kind of we're kind of building trustless technology, but before it's fully tried and tested, people they will need to trust you, right? And you really need to be able to command that trust. So I would say that that's maybe two things that people might not expect going into it, right? That like A, trust is actually very important, and B, you're going to be lacking a lot of tools that you might be used to.
Yeah, okay, that's very insightful. So for the audience here, like who are your ideal customers and who are your strategic partners, and who would be like the ideal investors for something like this? Can you share a little bit on all three of those points?
Yeah, absolutely. So I guess the kind of target users in the beginning would be primarily for us is like large holders of BTC, right? That are looking to earn a yield on their BTC, and that are interested as well to try things on chain, right? And that have that kind of mentality that that these kind of things like Bitcoin capital markets should be organized where they belong, right, on chain, which is something that not everyone believes, right? So it's really kind of carving that out and really going only after those. Then of course there's also borrowers that we that are very important on this protocol that we have very very strong relationships with. And then when it comes to investors, like we would mainly be looking at working with those parties as well, right? So that's the beauty of doing stuff in DeFi, is that often your users will also be often in the position to invest in the type of thing that you're building. And also it might be easier in many ways to find investors than actual users, right? So if you just like keep aiming and keep looking for potential users, then you will go in the right direction, and you will get people on board that are actually aligned with the long-term vision of whatever you're building.
Yeah, no, thanks for sharing that. And where does trust before we get into trust machines, where can we check out Zest? Yeah,
so you can head to zestprotocol.com, and there you can figure out a bit more about the protocol. So Zest is ZEST, and then protocol.com. There you can also, so we did a test net, right, at the end of last year, and we closed that also at the end of last year. And now the main way to access Zest protocol before launch is to request early access, right? Where we basically do closed early access previews with some select users. So there's an early access button on the website, and people can register there.
Super excellent. Thank you for that. So ZEST protocol, all one word, .com, zestprotocol.com. Okay. And so you're also one of the general managers of Trust Machines. Can you share with the audience a little bit about the vision of Trust Machines, because it's raised over $150 million, if I understand correctly, which makes it one of the biggest Bitcoin companies in the world currently, right? And so there must be some exciting things going on there. Can you give us like sort of like a high level of how this all fits into basically ushering in the advent of Web3 Bitcoin economy?
Yeah, absolutely. I mean, yeah, that's it. It's right in what you just said, right? So the mission of Trust Machines is to build the Bitcoin economy, and build Bitcoin applications specifically. Right? And but we realize that to build the Bitcoin economy and to build Bitcoin applications, you need really great infrastructure to build on. Currently what's available to us is there is Stacks, there is Lightning, and there are a few things that you can do on Bitcoin L1. So their Trust Machine has also been is contributing to the Stacks L2, right, to make it easier to build on. Yeah, so that, I guess really the mission of Trust Machines is to build the Bitcoin economy and create those applications. But before we're fully there, where all these applications can reach escape velocity, there's a lot of work to do on the infrastructure, as well.
Yeah, when you say infrastructure, maybe we could get an example, sort of like, and correct me if I'm wrong here. It's sort of like you have this piece of land. There's nothing on it, but if you want to build a civilization and homes and offices and restaurants, right, basic living things, and even lifestyle entertainment, probably the first thing that we do with the land is we have to build some roads, right, so we get to it, and then maybe the electricity and the water and the utilities. And then once we have that basic infrastructure, then we can start building the buildings and housing. Is that how you see it, or is it something else?
100%, right? Because that's a bit like also the story of Zest protocol, right? We initially we wanted to build it with the infrastructure that was currently there, right? With the libraries that existed for Bitcoin, the stuff that was possible on the stack layer at that point, and the kind of design that we came to was it's promising, right? And we have built it, but to really reach scale, you'll want to be able to natively deposit Bitcoin onto the stacks layer and move it from there, right? So that's like, say, one of those examples. So without being able to move the native asset of L1 around on L2, then it's fairly limited what you can do, right? So I guess that's a very good analogy of like how we're actually going to create buildings in Bitcoin land, right? We first need roads on which Bitcoin can move, right? And that's in a programmatic way, right? And that's really what for example something like SBTC on the stacks layer enables.
I see. So SBTC is more like the roads on which Bitcoin can move. So Zest is more like is it a hub, or is it more like maybe like the decentralized bank?
Well, it uses the roads. It uses the roads, right? So it uses those roads to move Bitcoin to and from its liquidity pools, right? So and there are like other pathways you can take to get there, but the roads, that's what's really going to be able to move a lot of BTC in and out, right? And I think that's a good analogy.
That's exciting. That's super exciting. So we're gonna wrap this up. Can you give like a few pointers to the founders, like, because there's a lot of people right now. I personally have been approached by multiple investors who traditionally invest in either Web2 or Web3 Ethereum, but not Bitcoin. But I've been pinged by investors, by accelerators, by even like founders, and asking, hey, what's going on in the Bitcoin space, right? And because people are deciding whether or not to jump in. We know that it's well, if the audience doesn't know, like, we'll tell you right now, it's the renaissance of Bitcoin, and it just started literally a few months ago this year. We're at the beginning of it, and so if you don't know about it, it's very natural because we're at the front end. But for the people that have been following, and they do see that, oh wow, it's like such a huge market cap, but like you can't tap into it until recently, right? Because of emerging technologies. Now, what advice would you give people when they're making this decision? I have many different things to do. The world's a big place, but why Bitcoin? Why do a startup on Bitcoin now? Right? Like, what's your thought process? And give these people who are sort of deciding, they're thinking about coming in right now, right? Like, let's give them some advice here, or share
No,
how you
absolutely. I
would
think if you've made it to this part of whichever video we're looking at, then 100% you're probably already 99% of the way there. But I would think, yeah, what's the sort of 1% that's relevant or helpful to push maybe people over the brink a little bit, right? Well, I think one, like the blue ocean is sort of very, very self-evident, right? So there's a huge amount of opportunity to build primitives, to build infrastructure, to build all kinds of things, right? So even if you have an idea for an application and you're like, hey, I would want to build this, and you try to figure out if it's possible, you probably run into like 5 different things that are all 5 different very successful applications, right? Or potential companies.
Yeah.
So just to try something out and figure out where all the bottlenecks are for you to do something is going to be big, right? Second thing I would say is, like, sure, we're in a bit of a renaissance for Bitcoin, but let's say nothing of this takes off, right? The bear case for Bitcoin at this point is that it will become some kind of store of value assets, right? For in traditional finance, it will maybe not be moved around so much. It's not going to be a decentralized computer. It's just going to be some sort of store of value asset. That's still going to be very, very, very big. And there will be demand for people that have experience developing on Bitcoin, or that have experience with figuring out how to make Bitcoin interact with other layers or other programs or institutions or whatnot, right? So there's really very little downside to doing this kind of stuff, right? Because even if all of this programming on Bitcoin goes nowhere, then you will be in a very, very unique position with a very unique skill set, having had very unique experiences that people would be very curious to learn from, or even that you could build a whole different kind of company on top of, right? So I think there's only something to be gained, and yeah, it's time to get started.
Super. Thank you, Tycho. And again, this is Tycho, one of the general managers of Trust Machines. He is also the co-founder and CEO of Zest Protocol. You guys stay tuned, zestprotocol.com. Okay, check it out. It's going to be one of the infrastructure companies of the Bitcoin economy. So stay tuned. Thank you, Tycho. Thank you, Tycho. And looking forward to you mentoring the next cohort at the Startup Lab. And thank you for your continued support.
That's great. Looking forward. Thanks very much, guys.